Hey everyone, New York's favorite British mortgage broker, BLavender here. So today we're going to talk about how rate locks work. We're not going to go over everything, but we're going to go over the timing of rate locks because depending on when your closing date is, it's something that you really need to keep in mind. So this is generally more important or more useful for those of you that are buying a home here in New York or you're refinancing, because transactions tend to take longer here, right? Out of state, it's very common for them to close in 2 to 4 weeks. New York, it's very common for it to take anywhere from 1 to 3 months. Particularly, well, the reasons why is because often sellers are not ready to move. So anyway, that's another video. Let's talk about actual rate locks. So let's say that you're going into contract and you're evaluating whether it's, time to lock in your interest rate or whether you should wait. Obviously, always speak to your loan officer about that, but let's talk about the specifics of how the time period of rate locks work. So I'm just going to pick some random numbers. They are not reflective of what industry interest rates are today. It's just simple numbers, so it's easy for you guys to understand. So let's say that today the interest rate for a 30-year fixed rate loan is 3% with no points, meaning you don't have to pay anything to obtain that rate, right? So we got 3%, very simple. Okay, but the rate lock portion for a 3% rate with no points is only 15 days. So we say to ourselves, that's cool. Excuse my terrible handwriting. We say to ourselves, that's cool that, it's 15 days, 3% no points, but the issue is that I'm not closing for 2 months because that's when the seller will be ready to close. So very simple, right? Instead of getting 3% for free, right? No points for 15 days. Instead, it's going to be, let's say, 3% and it will cost you, let's just say, half a point. For, let's say 60 days. Now, is it usually half a point to go from a 15-day rate lock to a 60-day period? No, it's not, but again, it's just a simple example. So I made another video. If you don't know what points are, please take a look at the rest of my videos, and that goes into detail about that. So let's say that it locks you in again for 60 days and it costs you half a point. So very simply, that you can see, the longer you lock an interest rate in for, the more expensive it is. That's why it's also very common for people to kind of if the market isn't too volatile and we're not anticipating large changes in the interest rate environment, it is common for people to wait until a week, 2 weeks before closing to finally lock in their rate, because if you lock it in for a shorter period of time, it will become less expensive, or perhaps you can get an even lower interest rate, right? So as always, talk to your loan officer about those options. Now, let's talk about the rate lock period itself and what happens when an interest rate lock expires. So let's say that, you locked in 3% for 30 days, and you've reached this point. You've reached the point where it's 30 days. You now have to extend your rate lock or let it expire. Okay, so a lot of people ask, why don't I just let it expire, especially if interest rates have decreased? Now, most banks, and again, it's different for every lender, will do something called worst case pricing. And again, this is specifically if you're letting your rate lock expire. We're going to talk about extending the rate lock in a minute, but for now, letting it expire and relocking. So let's say again, 3%, 30 days, it's expired and you want to relock. What most lenders do is give you something called worst case pricing. So what worst case pricing actually is, it's literally what it sounds like. It's comparing the pricing based on the day that you initially took that rate lock, right? 30 days ago. So whatever is worse, this or the new pricing when the rate lock expired. So again, you're not going to be able to really cheat the system and get the better interest rate, because that is the locking policy for basically every single lender. Now, if rates have dropped dramatically, some lenders will allow you to renegotiate the rate lock and obtain a lower rate for a fee. Okay, and actually sometimes it is free. It really just depends on how volatile the market is and that specific lender's protocol when it comes to relocking. Okay, so that's really it, right? Worst case pricing, again, comparing it to when you initially took the rate lock compared to the day that you're relocking or the date that it expired, right? So it's very difficult to play that game. I said I was going to come back to something before. Do you remember what it was? No? Okay. So you could just edit that out. But yeah, that's really it. That's how rate locks work, and relocking essentially in a nutshell. As I always say, talk to your loan officer. If it's me, call me. And that's really it. Have a great day. Okay, I now remember what I was going to say. We were going to talk about simply extending the rate lock if you don't let it expire. So this scenario, it's not the same anymore because, again, we're not letting it expire. So let's say the 30-day period is up. And now you have to extend your rate lock in order to retain it. So the process, again, it's different for every lender. Also, lenders change how they treat rate lock extensions based on how the rate or the interest rate market is behaving, right? So it's subject to change. Sometimes lenders have a courtesy period of 3 days to give you a free rate lock. Sometimes it's 12 days, sometimes it's 0, right? So if you have to pay to extend it, it's typically a set amount. Say per day, it will cost you 5 basis points, which I break down in another video, right? So for instance, if we're keeping the 3%, and one of the things also evaluate when it comes to locking your rate or extending your rate lock is when you're actually going to close. So sometimes people lock prematurely and they have no closing date in sight because they're waiting on the seller to fix some type of title issue that they have, or maybe they're just waiting to find a place to move to and it's kind of indefinite. So in those circumstances, you go back to what I was talking about before, is taking an adequate rate lock portion. But again, sometimes it doesn't really take, right? So let's say that you got to extend 1 day and it costs 20 basis points. Actually, that's not true. That's a bad example. Say it costs 5 basis points per day. I'll go over basis points in another video, but let's say that translates to, $50 a day. Again, it will cost you $50 per day to retain that rate. Most lenders, especially the lenders that we work with, that amount is not due on that day. It just gets added into your closing costs. So yeah, that's pretty much it. That's how worst case pricing works, how interest rate lock periods work in a nutshell. There are a million variations and scenarios, so I always say, don't just go off my video alone. Consult with your loan officer, and again, if I am your loan officer, call me and we'll go over it together. Have a great day.